and welcome to the XQCPA channel, where we share with you the latest and greatest tax tips and business news. The election results are in, and Donald Trump has officially been elected as the 47th President of the United States. Trump made many bold promises while on the campaign trail, so let's break down the economic and tax proposals that could affect you.
Hello, my name is Charlene. I'm a CPA. I'm also a certified tax coach. I am pretty sure that with the upcoming election result, everybody, especially business owners, are excited about all the upcoming tax law changes. So in this video, we are going to go over the specific strategies that will change your life and what you should do as a business owner, the strategic directions or actions you should consider in order to benefit from these potential upcoming tax law changes. So if you want to find out more, please stay tuned.
Let's first focus on his domestic tax policies. Back during his first presidential term, Trump spearheaded the 2017 Tax Cuts and Jobs Act.
Now, if you recall, Donald Trump signed TCJA into law on December 22, 2017, making it the most sweeping overhaul of U.S. tax code in decades. TCJA is going to expire December 31st of 2025. So I want to recap all the essential or important benefits under TCJA and also some of the disadvantages. First thing is lower tax brackets. If you recall, since TCJA, everybody has been paying lower taxes. There's double standard deduction. If you recall, for single filer, it used to be 6K of standard deductions. It doubled during TCJA to 12. For married couple, it used to be 12,000. It doubled to 24. Expanded child tax credit. Before TCJA, it used to be 1,000, and then after TCJA, it went up to 2,000. So it doubled. SALT deduction cap. SALT is related to state and local taxes. So if you recall, before TCJA, it used to be that if you pay property taxes for 20,000, you can deduct 20,000. But after TCJA went into law or signed into law, if you pay 20,000, you can only deduct $10,000. So especially with people in states that you had to pay state taxes, it's really a major disadvantage because you end up having to pay a lot of money for your state income tax, but you can only deduct up to $10,000. So what happened is Donald Trump is hoping that the upcoming tax law changes, he will be able to remove the cap. The next thing I want to talk to you about is the estate tax exemption. Now, if you recall, prior to TCJA, it was at the threshold of 5.5 million per person, and then it went up and doubled to 11.18 million under TCJA. So if you are a married couple and you're wealthy and you want to give away your wealth to your kids or future generation, essentially you can give away 22 million without incurring any estate tax. The other advantage is QBI. If you recall, QBI is Qualified Business Income Deduction. Till today, many business owners are enjoying. You have a pass-through entity, you have a single member LLC, you have an S corporation, a K1, you have a partnership. As long as your business is profitable, you get this extra discount, which is 20% of your profit as a business deduction. So there's a lot of concern since we have enjoyed this deduction for so many years, past December 31st, 2025, what is going to happen? Is it going to continue?
The temporary provisions are currently set to expire at the end of 2025, meaning you'll likely pay more taxes from 2026 onward than in the last few years. However, Trump and many lawmakers have called for the TCJA's expiration date to be extended indefinitely.
Now, so I want to talk about some of the new promises or new tax law changes that Donald Trump has promised to introduce in the upcoming year. I assume that we will hear the news earlier or latest by the end of 2025.
While the 21% lower corporate income tax rate is a permanent provision of the TCJA, Trump has promised to revise it in his second term.
So there are a few things that he has promised to business owners and individuals. The first thing is the 15% corporate tax rate. It is very attractive because it used to be 21%, it used to be even more, but he is saying that it will be reduced to 15%. So if you operate a C corporation, even if you don't have QBI benefits, you technically still pay very low taxes because it's only 15%, but there's a catch. The catch is you have to maintain your operations in the US. So if you outsource contract labor or a lot of work to offshore, you wouldn't be paying 15% because you are not eligible to take the benefit of this low rate. The other thing is the SALT cap that I've talked about. He's thinking of removing that. If it's going to be signed in law in 2025, then I feel like 2025 is a year that taxpayers, business owners should pay as much property taxes as possible for that year instead of the year 2024, because in 2024 the cap remains at the $10,000 limit. Now, the last one I want to talk about is kind of interesting. It's a no tax on tips, overtime, social security benefits.
Depending on the taxpayer's income from these sources, this could mean thousands of dollars saved.
I can understand that, President Trump is thinking of removing taxes on social security benefits. Well, that's understandable because that is going to help a lot of elderly couple or elderly individuals in the country. However, pertaining to no tax on tips, what's going to happen is, my opinion is that a lot of restaurants have been suffering in the last 12 months. And restaurants typically have very high turnover. Now, with the no tax on tips, I would imagine that the general public will feel like the service quality is going to increase, is going to improve, because people would want to make more tips since tips is no longer taxable. And the other thing is also about overtime pay. There will be no tax on overtime pay. What that means is that more people are going to be willing to stay overtime to do extra work, to generate extra revenue. Employees are going to be more willing, on top of the overtime pay, do more overtime because they don't have to pay taxes on overtime.
In addition to these many domestic tax policies, Trump has proposed major changes to how the nation charges other countries for doing business with the US. This is prevalent in his plans for raising tariffs, or taxes on imported goods. Across the board, he plans to raise tariffs a flat 10 to 20% for all foreign nations. For some nations, though, tariffs will be much higher. China especially would face tariffs around 60% at minimum. Mexico would also be hit with a 100% tariff on vehicles it exports to the US. These tariffs are part of Trump's initiative to boost American production.
Thank you so much for watching. My marketing team will really appreciate it if you can hit the bell notification, like, share, subscribe to this channel, because we put in so much heart, tears, sweat, blood to develop this content. So if you want to encourage us, please do that. And also, if you can leave us a comment, just anything. What do you think about these upcoming tax law changes? Do you feel that you will be able to benefit from it? If you can share your opinion with us, you stand a chance to win my book, which is How to Grow Your Wealth Through Tax Planning. Thank you so much again for watching. We will see you next time. Goodbye.